All right, so let's get going, folks. Today is Wednesday, September 4th, 2024. We're just gonna go through charts. We're gonna take a look at what's out there. I'll get off the screen so that you guys can see my screen and what I'm sharing. So we're gonna touch base here briefly. We're gonna do a little zero DTE here for you. And let me open the chat. Yeah, so Lance, I actually just opened a zero DTE. I couldn't post it anywhere because I'm trying to get into here. We'll take a look at that. But I just did a put credit spread zero DTE. Why did I do that? So I can either show you live here, or I could try to take time and type it all in Discord. So I hate trying to keep up with zero DTE. It's just a lot of work to post that, do my own stuff, show you what's going on. So let me get off video here so you guys can see what I'm looking at. So typically this is my chart that I look for on the day trading. I can do this on Trading View, do this on Toss. Doesn't really matter which platform you're on. It's all the same. Just like I mean, I'm pretty much a creature of habit. I try to keep it simple, even though maybe it looks crazier than it is with all kinds of lines and stuff on here. Really, it's just not that mystifying when you look at stuff. But overall, I look at 2 time frames. Normally, for most setups, I'm looking at the weekly time frame and a daily. For zero DTE, I simply look at a 15 and a 3. Okay, so 15-minute and a 3-minute. Right, so those are, essentially my setups. I just look at 2 different time frames. To me, the 15-minute is the master. Okay, what's happening here is really a slave to what's going on in the 15, but you can start to see if things are starting to turn a bit. You'll see those first here. So hopefully you guys can see that. All right, so this is where we are. So on the 15-minute here, we sold off, a tad at the open, but then we bounced off of these lows, but we went underneath the 3 ATR, which is down at like a 45-degree angle, which means once it's at a 45-degree angle or more, and we're riding it down, then it no longer becomes any kind of a level to me. So you could just follow this thing down and till it flattens out. Same thing on the upside. I don't get too crazy about the 3 ATR bands if they're moving at a 45-degree angle up or down. What really matters is, if they're flatter and you're in here, then they can potentially be some support and resistance levels if they're not moving strongly in one direction or another, which they are strongly moving lower right now, but maybe getting a little bit flatter. So anyway, we did get a little overextended. If I look here, at the end of the day yesterday, around 3:30, we got oversold and we started to rally a fraction towards the end of the day. And then you can see the stochastic momentum has been rising since then. And then we opened this morning with MACD continuing to rise. So MACD rising, stochastic momentum rising, RSI is rising, the squeeze is reversing higher, all in the 15, which is pretty bullish in my opinion. Okay. And then we can look at the 3, and the trend is pretty much the same. MACD, RSI, all these things are rising. So if they're rising, then I want to do a put credit spread. Pretty simple for me, and I will put a put credit spread in. I'm going to just share briefly. This was the trade. I entered it, 10:31. So just as I was coming on here and you guys were listening to a little back in black, I had an entry on this. It got filled. It's up a little bit right now, nothing exciting. So we'll, I don't even want to watch it. So let's just go ahead and put in an order to close. And we'll see what happens. But we'll play a little zero DTE game while we're here. We entered at 50 cents. Roughly, this was a 5 delta or so. I don't know why I'm not seeing any of it here. Okay. So it was roughly 5 delta when I entered. I actually missed the entry a bit and I had to move it up. I was actually lower around 54.50, 54.20 was the original. Didn't get a fill because it was moving quickly. But here you go. All right. So there you go. That's, just a little bit of a little trade there. And that's pretty much it. And sizing wise, I size these for, a 0.5 to 1% of my account at the max loss. So if I put this thing on here for 20 contracts at 50 cents is about $1,000. So at a loser, it would be a $2,000 loser. And this account is roughly what, 3,500 or something along those lines. So way less than 2% on this particular trade. What are we sitting at right now? I think 350 or so. So if I lost $2,000 on a $350,000 account, okay, this would be roughly a 0.6% loss. Okay, very small trade. Okay, so if I lose $2,000, it's not, I won't love losing $2,000 at a 2x loss, but it's a $350,000 account. So again, the max loss on this trade is 0.6%. So at 0.5 is about what I shoot for on those 0 DTE. And yeah, we're up $260 today. Again, it beats a stick in the eye. So we'll keep watching it anyway. But let's go back to that. But I thought I would show you a little 0 DTE. I usually do credit spreads. I only do credit spreads, and I'm pretty much only directional. All right, so let's get out of that. And we're still plowing upwards. Right now, the S&P is up 12 points. I'm going to make some notes as we go. So, yeah, no need to really watch this, at least for now, if we reverse and start heading lower. But we're about 55.40. Okay, and we're fine. Now, a little candle on the 3-minute. Does that mean we're going to tail off? But we got the bullish PSAR. We got everything moving to the upside. We're in a squeeze to the upside. It's a little bit of a bounce at the open. Will this bounce hold? Probably not. I think this is a bounce to potentially watch and sell off into, but let's see how we hold on this. If we reverse, we'll get out. All right, so there you go. The 0 DTE, yeah, much better than a gap up. 100%. Igor is much better than a gap up. If we gapped up today, I'd be pretty bearish on the day. The fact that we didn't gap up and we actually opened down a fraction and then kind of recovered here and just a slow grind up, I think this is all fine. So anyway, that's where we are. This might have been the only move on the day to the upside, and now maybe we roll over. We'll see what happens. But the 15-minute still looks decent. MACD rising. RSI is not even to the 50 yet, and it's rising. Okay, so any pullbacks in here are all good. All right, so let's get out of this. There's day trading for you. 0 DTE trades. Okay. And that's it. It's a simple trade. You win, you lose. I'm just playing direction. And yeah, if you stay consistent to that at 5 delta, you should win more than you lose, hopefully, by a good amount and have a good positive expectancy. All right, let's get into ES. Here's my take. I give you guys can chime in on your takes on it, but my take is, hey, we're still in a nice bullish uptrend here. If we even looked at the longer term here on the daily, let's actually flip this over to a monthly chart. So if we look at the monthly chart, this thing has just continued to head up, up, up. Is it overextended? It looks a bit overextended. I don't have any, moving averages, nothing on here. It's just simple moving up. And it's just getting farther and farther from this trend line. So anything that comes back here, I think, okay, somewhere around 5,000, 4,800, I don't, still to me on the monthly is an uptrend. Okay, so you've got a nice long, good monthly uptrend. that you're in. Looking at the weekly. Okay. And the weekly, still nice uptrend, just getting farther and farther away from this main uptrend. So you're just getting a little off, off the path here, and you might just need a little correction time to come back in. No big deals. And then daily, I just wanted to use the daily here with you. And the only reason is I'm just trying to show you a bit of the expected moves that are on here. It's pretty interesting that this week, the expected moves are the exact same height as last week's expected moves a bit. So you get the same expected move. We're now down well outside of the expected move for the week. So you would expect that you might get some snapback into the expected move area. It doesn't mean you have to. I mean, obviously you can break down, but typically if you break out, you'll maybe head back inside, and if you break to the upside, you can stay to the upside, but it doesn't typically just keep going. It typically you break and then you start to come back. You break, okay, and then maybe you start, break down and then you start to come back. Break down and you start to come back. Break up and you start to come back. Then you had a big breakdown. But typically you don't stay outside of that the whole week, but you can. Nothing says that it has to do anything, but I'd just like to show the expected move for the week, and we're already way below the expected move after yesterday. All right, so overall, I think on the weekly, it's a nice bullish trend. You came back to the 21 with a great hammer candle here on that August 5th move on the weekly, and a bounce higher, exactly what you would expect off of that candle. Okay, everything was heading up, and then this week now you've got some weakness overall because of yesterday, but in the grand scheme of things, it's really not a big deal. So I'm not getting too excited about it here on the weekly. If we look at the daily, we've been in this range for a while. We finally broke out of this little range yesterday, okay, to the downside, but good consolidation, V bounce, consolidation. Now we'll see what happens. If we stay here for the day, okay, not a bad little hammer candle forming on the daily. Yeah, Igor, I will let you post this thing if I can find that. All right. All right, cool. Igor, you can let people in because they're probably all screaming in the Discord. All right, so on the daily chart here, we did break the 21, which is a little concerning, but not a big deal. And we held the 50. We're still holding the 50. We bounced off it again today. I don't know that we're going to hold the day to the upside. We might still get some more downside. Right now, the momentum is all down. You got squeeze rolling over, RSI's dropping, MACD's dropping. You broke the 21, and now will that become a little bit of resistance? Possibly. As long as we can hold on to roughly the 50 here, okay, or the 21 over here on the weekly, I'm not that super concerned, but I think this is a toppy looking pattern, potentially a double top-ish if we start to fall. But I think it's just be a little concerned and be smart. I don't think nobody has to panic. Nobody has to do anything crazy. I think just be smart and look at the best trades on ES to set this up. Right now, I think you're also potentially running into a good strangle opportunity on ES. Okay, so I think strangles here. I think 1-1-2 trades here are good, especially if you think we're going a little bit lower, okay, but not really crashing. I think there's a lot of absence of news now. So you don't have, there's no earnings, no NVIDIA stuff. You've got economic earnings things. So if there's a big economic report that comes out that swings things, then okay, we'll monitor that. We'll pay attention to it. But other than that, you don't have a whole lot of major news. We'd usually get a sell-off in September. but it doesn't have to be. It's only like half the time. It's just more than most other months, but it's not like every September's a sell-off. I think the average is like 44% of Septembers are actually lower or higher, something like that. But it's not like every September is a down month. And what they know, I think what they also found was Septembers in an election year are actually mostly positive. Well, it's September, we're in election year. So I think all of that seasonality stuff you can take with a grain of salt, figure out what you want to do. But I think if you trade what you see, not what you think, consolidating, breaking to the downside, be a little cautious here. If you take a look at the VVIX, we look at our major, area here that we've moved to the upside. Well, VVIX really started making a big move yesterday. It is easing back in yesterday, but a pretty nice move. So volatility of the VIX definitely increasing. So again, it makes, it shouldn't make you nervous. It should make you just a bit cautious that, hey, I want to keep some dry powder here. I want to not go all in. Maybe I'm not going to take my buying power all the way up to 50 or something. I want to, if we start to sell off, there's going to be bargains. I want those bargains. So there's just no reason. Now, we're not toppy on the market. Okay, the chart shows we may be rolling over, but we're definitely not overbought at all on the market. But you've got some increased volatility on the VIX. But the VIX itself, while elevated, it's still sitting at 20. Now, it did pop up to 23 today. It is elevated. So again, a little bit of alert status, which means just a little bit of, hey, just be cool, chill out, don't get too wound up about things here, and play it by ear. So don't get too excited on it. But we've got a little bit of elevated volatility. I think too, a play that I am looking at is SVOL. So SVOL is and I know there's a couple people here that posted they don't like this for whatever reasons, and they want to cite things. I just like it from a trading standpoint. I think SVOL pays an incredible distribution. Okay? It's a very good product. Okay. Yes, it's a newer product, and some people wrote that, do you trust this company? Yeah, I pretty much do. I like the way they run it. It's been only out for about a year now, but I do like the product. I've talked about this product before. I think owning it at 21 here or something. I mean, the options on this is not really the play. The play is, do you want to buy SVOL in here and play for the dividend on this drop? I think it's interesting here that vol is going to mean revert. So if you think, can we spike up more? Sure. But what happens every time we spike? Within a couple of weeks, we're back into this range. Every time. And it's never a time where that doesn't happen. Okay, so every time vol spikes, it mean reverts. We look at the VIX. Okay, again, when it spikes, it reverts. It spikes, it reverts. It spikes, it reverts. It spikes, it reverts. It spiked again. Okay. Doesn't mean it's done. Doesn't mean it can't go to 60. But I do like SVOL here as a play. I will potentially be looking at SVOL to get into with some long shares. Not really a good options vehicle, but I think if you own it, the goal here is to get it's I think a 30-cent distribution. It's a pretty good distribution that you get. All right, so there's a little volatility and a little way to play reversion in volatility. I mean, had we gotten in here, okay, we don't. I mean, this is not giant swings here. You're from 20 back to 22. It's just consistent, but it pays a distribution. So from an income generating standpoint, in a PM account, I think this is hard to borrow anyway. So it really doesn't matter what account you put it in. All right, let's get moving. Let's get on to oil and take a look at oil. It has definitely been in a downtrend. On the weekly here, it's breaking below on the symmetrical triangle. You can see it breaking out to the downside here. I kind of like it. So I do like this opportunity. I think if you look a little longer term on oil, and you can look back in here, let's get a weekly. Okay, if you look at oil back here, you've got some support levels back in here a bit, and then you've got some more down, a ton of support down here around 67. Okay, and I think you can go all the way back to 2021 to the lows, and we're still sitting around 67. I don't think oil is going to 50 or 40, although you never know. But what I'm going to put my odds on is that we're gonna stay above this 66, 67 range that seems to have been support over time. You can talk about the news and OPEC's delaying a meeting and China consumption is down. Okay, all of those things are already reflected in this price for the most part. It's just coming down, less demand, okay, a little bit of and they're not cutting supply at all, at least not right now. So dropping demand, supply's not changing. So if you took Econ 101, things go lower. So I think that's what you got to look at for the most part. Here is there a bottom in this thing? Do you think OPEC is going to want this thing to go into the 50s or 40s? Are they trying to squeeze players out? I don't know. But overall, I think I like it. I think it's an opportunity in oil. The further it drops, the better the opportunity gets for me, I think, to do something. Here's the volatility in oil. So you can see an oil volatility spiked way up back here on 8.5, reverted back down, stayed a tad elevated like the VIX did, okay, and a pretty good spike. So right now in an oil, you've got an IVR, and again, IVR is all you need. Okay, I think I saw a Tasty Trade segment with Sosnoff as well, but I think on IVR here, on oil, I mean, IVR is all he says you really need. You don't need to look at a whole lot of other things because you can see the volatility of each underlying with its IVR if you're tracking that. So just watching that. But OVX here gives you a good idea of oil here. That's fine. So I like it. I think as with rising IV and rising volatility, I think oil is not a bad potential play. Do I want to catch this knife yet? Let's just wait and see if we get any kind of a bottoming signal here to get in. I don't want to jump in on something right away. MACD is falling, RSI is falling, squeeze is firing to the downside. So there could definitely be some more downside on oil. I'm just pegging like 66, 67 as a potential level that I would look to potentially get in and do some more trades. But I think a 112 on oil is not the worst thing in the world. So I think potentially a 112, maybe not just a like a naked put, but I think a 112 where you have potential that if it just mires sideways or drifts lower from here, then you've got trap profit potentially with increased volatility here. I think you can get a decent amount away on the nakeds. I think oil is a potential. Like ZN, you guys know I love bonds anyway. Okay. We've been in, on ZN. I like ZN a little bit more than ZB right now. The white dots are on the Squeeze Pro are a more extreme squeeze than red. Okay, so on Squeeze Pro, the white dots is a more extreme, a tighter squeeze than red. Okay, so jumping into here, I coded them white because I have a black background. It's easier for me to see. All right, nice move up on ZN. Again, I got closed out of multiple ZN credit spreads today. In fact, I must have gotten let's see where and right now we are sitting at 5 1/1000ths or 5 10,000ths of a tick away from closing out winners on one of our put credit spreads. So hopefully that'll happen soon. It's happened in 2 of my other accounts already. I like bonds. And do I think bonds are going to go to the moon? No. I don't think that's how the rate is, things going to work. I don't think that we're going to see massive bond rallies. Again, looking at a longer term chart here, and I should probably do a chart that's not. Nope. And there's my 0 DTE, by the way, just got filled for a 50% winner. So there we are. So zeros. All right, so 50% winner in 29 minutes. So not too bad. We'll take that, and we're done. Out for the day, back to trading, and we'll make a couple $100. All right, so anyway, let's get back. So there you go. We got a little 0 DTE today. Got some other trades going. I love the fact that I think this thing broke the downtrend. Okay. Perfectly hit, and then came back up, came back down, tested it, bounced off of it, moving higher. So this downtrend pretty much bye-bye. Right? But if you're looking at this thing on the monthly chart, I mean, it's not like this is going to go gangbusters up from 114 back to like 142 for the high, or 20 more points. That's only 20%. So this is not going to make you, 100% return or something on it. I think they just drifts its way higher if you're in TLT as well. Same basic setup. Okay. TLT just meandering its way up. This is why I don't mind. Somebody said yesterday, it's a recipe for disaster to sell or something like that, of selling calls against your TLT long stock. I don't think so. Or long positions. I don't think it is. Okay. I am not expecting this thing to rally as fast as it came down. I don't think TLT is going to the moon. I think the Fed's going to cut. I think they're going to cut a little bit more. This is the 20 plus year bond ETF. It's not going to react like the front end of the curve. It's towards the back end of the curve. I think it just continues to go sideways and higher. I think right now TLT is, I hate to say, the perfect covered call vehicle, but I think it's a pretty good one. I can't really see too many scenarios where the Fed's going to be cutting rates. Or I'm sorry, raising rates. I should say raising rates. So I don't see where the Fed's going to raise interest rates much. I think that, you take a look at it. You got slammed on TLT covered calls late last year. So I don't know what maybe in this move from 80 to 98 or something over a couple month period. I don't know. I do like, I do like what we see here. Yeah, we ran higher. I think it's just a matter of what calls you're in, but yeah, I think we have a nice slow uptrend going, or sideways. I don't expect TLT to rally way up into the 140s anytime soon. If at all, I just expect sideways to slightly higher on TLT, which would be the same type of a thing for ZN or ZB. And ZB, okay, same type of a setup. Now we're even further away. This is the 30-year. Okay. And if you rolled up and out, then eventually you made it back. But this is the 30-year. This thing keeps just knocking on the door here. It's up and down, oscillating here. I just don't see it dropping significantly here. So I'm still going to want to put on longer bond futures trades. I think this thing just continues to go up. You might get a pullback or two. Okay. As you move, again, it's in that sideways consolidating pattern. Maybe it's going to break out, but I don't think we get a major break. I could be wrong. You're getting a breakout of this consolidation here. All good. Perfect for our setups, because we are set up nicely on ZN with multiple credit spreads. I got naked puts. Got one credit spread up 42%, one's up 17, and naked puts up 14%. I'm already in ZN. I may actually put more ZB or ZN. Okay. And I like credit spreads, and I really think you could also do, I don't know if you want to do leaps on it necessarily, but you could. But I just think you can do naked puts, and you can do those a little longer out, 60 days, something like that. Yeah, 112 on ZB. If you can get it set up right too, I think that's a great trade. I don't know that you're going to get a trap on it, but who knows? Depends on where you put the trap and what you're getting. All right, so there's ZN, ZB, like those gold. Okay. Looking at the weekly, it's been overbought on the RSI. MACD's kind of rolling over. It is firing long on the squeeze. So it, still gold is bullish overall. It's breaking this uptrend a little bit sideways. I don't know that gold sells off heavily in here. I think you've got plenty of support levels above 2,400 on gold. I'm still fairly bullish on gold. I just think like 111s, 112s on gold. I think you could even do credit spreads. Put credit spreads. I don't think I would be, even though we're overbought, I don't think I would necessarily be doing a call credit spread here, because I don't know that we're selling off that hard. But we'll see. And I talked, let's go back to ES for a bit. I talked about potentially, depending on how the market looks today and the rest of this week, I'm going to start to look that if we can't beat this high and we start to roll over, and we're back above the 21 EMA on the daily as well. If we start to roll over here, then I might look to sell calls, but we're not in an overbought scenario. But if we get back up here, RSI is probably going to be diverging a bit, which I think, again, gives us any rally that doesn't go higher or break this here and starts to tip over, I think makes a really good opportunity to sell calls, call credit spreads, calls against my 112s. I think those are all potential pretty good opportunities. Still can't get filled on a stupid hedge, but okay. Let's go back. That's gold. The Aussie dollar. Nice pullback as the dollar started to put in a little base. And we didn't really talk about the dollar, but the dollar had a massively ugly couple months. Maybe finding some support on the 200-day here on the weekly. Bouncing off of that. Had a nice recovery off today, but a big couple-day recovery here. I don't know that the dollar continues to just drop and fall out of bed. It's definitely weak, which is giving us a lot of strength in these Forex markets. Also, it's good strength in gold. The weaker the dollar, the better gold's going to play, and the better your Forex instruments are going to play. All right, so let's take a quick look. Here, I like the fact that we're right at the 21-day moving average here. We're close here. RSI is in the 50s. I think a 6A is also set up for potentially a strangle opportunity. I don't know that I would 112 it, but you could probably do 112s on 6A here. But I like strangles on 6A. The euro, a little too strong, in my opinion, still. Okay, but I think I'd like to see it chill out a bit more. It's not perfectly set up for me for a strangle. It's a little too bullish, hanging above this upper channel. A little too bullish. I'll stick away. On the NASDAQ, this thing looks a lot worse than the S&P. Definitely a lower high here. Big worst day yesterday. Really smashed through the 21 and the 50. It's a mild recovery on this at all. Apple, Amazon still not recovering today. Microsoft flat. So we're not really seeing a big improvement on the session on the NASDAQ. I don't like the NASDAQ at all. I think there could be some rotation out of some of these stocks. Into what? Who knows? We'll see. RTY on the Russell here. Obviously, this thing still well above its 21 and its 50 on the weekly. It's hanging on to the 50, trying to get back to the 21 here on the daily, but overall, lower high. See where we are. I think this thing sets up okay for a bit of a strangle, but we also have put credit spreads on in RTY because overall I'm fairly bullish on this thing as rates will start to come down later this month. I think that's going to be good for, I'm not just Tom Lee following here, but I do think that we'll hold okay. I think the best place to get in on these, we got in like 12 days ago in here when we were down in this area before we recovered. Okay, or maybe on this move. We're still sideways from that, but I think if you're following kind of my put credit spread setup, which is again same type of setup for poor man's covered calls and all of those other things. I think if you've got an uptrend going, you don't want your RSI over 60, which it's not. So RSI is not overbought. It is falling on the weekly chart. I'd like to get back into here below the 21, above the 50, somewhere in this range. If we can get in here, then I definitely think I want to start to write more and more credit spreads. We have two, and both of those credit spreads right now have a 1950 and a 2075 on it. So one of them is 1950 is down in here. Okay, so this is one of the put credit spreads that we're watching. Hopefully this is helpful to you guys, but and then the other one's up around 20. The other one's a lot higher. So the other one's around 2075. So somewhere in this neighborhood up here. Somewhere around there. So these two put credit spreads, I think that obviously this one's a much better setup that we got in. The other one's a little higher. Let's see if we can keep holding, the 50 here and moving higher. All right, like RTY. Copper setting up, I think, decently. Here you got MACD rising. You've got a lower RSI. It's not rising right now, so it's been falling. You can see we're breaking sideways out of this descending wedge. Yeah, not such a bad thing. And here, copper's just chilling. We've got a put credit spread here in copper at 3.8, which is way down here. This is the mark we're looking at down here. Right, so we're hanging out above that decently today, putting in a decent day. Yes, China may not be, the demand of China's a mess. China's wrecking everything. So demand in China for oil, demand in China for copper, China heading into a recession, China reducing their buying, China, all crappy stuff in China is impacting the rest of the world. But I think this thing still holds in here. Let's wait and see if we get any kind of a bounce. But overall, copper, it's not the worst thing for a potential strangle either. I'm not adding any more trades, but a strangle is possible in copper. All right, anything? Oh, then I want to take a quick look at soybeans. Have put in a nice base down here, and they're really moving up strongly. Over the weekly chart, it looks like on the daily we've really missed some part of the move, but I think you haven't. I was kind of waiting for a little bit of a sell. I do like soybeans here, so I think on ZS, I think there are some credit spreads that you can place on On soybeans, I'd like to see it chill out a bit, but I think with soybeans, what are we looking for an IV? Okay, like 27, 26 and a half, something like that on soybeans. So it's decent, decent volatility here. I think soybeans is another potential trade. Corn, kind of the same thing. Okay, so I think corn is definitely holding inside its channel decently, and it's above its 50. Now definitely above the 21. So corn's actually not bad. And wheat also, it's already made a pretty good move, but I wouldn't fault anybody for doing like credit spread. So a lot of defined risk trade stuff that I threw out for you today. So there's plenty of trades to be done. Let's take a quick look at the account. So lots of trade setups. We've got some room. We're having a good day today. Question: what's your plan for the hedge that I put on yesterday? That wasn't a hedge, so that was really just a spec trade. So I bought a put on the off chance that the market would potentially move lower. I'm not going to close it necessarily if we rally. I may just let that thing expire. It's a directional trade, sized very small, that like a 1% loss or something. Not like a 0.5% loss. I'm not going to do anything with that trade yesterday. This is the trade right here. Okay. And even though I termed it a hedge, more of a trade. I just put this thing on. It's just a long put. Here it's down decently here, but it's sized so small. It's not really a long put hedge. It's just really a trade. I didn't categorize it as a hedge in my spreadsheet. Maybe I don't know what I categorized it when I posted it. Yeah, it's really more of a trade / hedge. If it gives me any hedge, great. Just directional. That if the market continues to slag, sell off next couple days, I'm not buying this bounce today holding much at all. So it doesn't mean that we won't be green today, but I'd be curious to see if we get any more follow through with some of the economic numbers coming out. I know we had some economic numbers. We had the JOLTS report today where job openings came in lighter than expected. And the Fed's looking at unemployment and that type of stuff a little bit closer than they're looking at, I think, what am I struggling to say? I think they're looking at the employment stuff more than inflation, sorry. So I think you saw the job openings come in a little bit light today. I don't know that that's really great. Tomorrow, we're going to get unemployment claims and non-farm payrolls. We'll also get some PMI tomorrow. So a lot of data, some before the market, about 8:30 with unemployment claims and so forth. And then we're going to get, and we'll see what the revised numbers are, but we're not expecting any change in unemployment. So if unemployment continues to tick back up, potentially, let's see what the Fed may do. We'll look at PMI tomorrow, but I think unemployment has a bigger factor in it. And I think now that the Fed is pretty much on the table with what they're doing, I think good news is good news, bad news is bad news. So if unemployment is falling, I think the Fed will take that, or the markets will take that a little bit as bad news. We do not want a harder landing or put the country into a recession, although I think that's still where we're heading for next year. All right, so we're in good shape on most of these trades. I would like to get something new in maybe oil, but I want to wait another day, see if we, on that. So I'm in no hurry. On ES, I'm still trying to get into this stupid trade. I'll probably have to do it with individual legs. So this is another one of those, another butterfly. Oh, it's the wrong. Oops, I'm gonna close my position. Did I get in yesterday? Oh, that's the 115. So That's my 1-1-1 trade. Sorry about that. So yeah, I'm trying to get into this trade here. I can't seem to get filled. But ideally on these regenerating flies, we're going to wait till we get into the trade to take off some of these shorts, buy more longs with it. We haven't gotten there. We're still slightly losing on the shorts, but the overall hedge is up anyway. And I'm trying to get another one on here. I can't seem to get filled. We'll see if we get filled. If not, I'll probably have to go individual legs as opposed to this. And I did move this up a little bit higher, although it's almost, it looks like it's the exact same numbers on here, even though we've sold off because I'm paying for this hedge. And because I'm paying for it, I don't really have to worry about the delta being so far away as much. The goal is on these regenerating fly hedges. These are more of a Vega hedge for me once they get going. It's not a Vega hedge now because it doesn't really give you, I mean, it gives you a very slight positive Vega. Once this trade gets moving, it'll be more of a Vega hedge. You want something that's going to give you more Vega so that if you get an increase in volatility, then that's going to help offset. This is more right now of initially a delta hedge. Delta target on this BF head. Delta target mean where you put it on at? Is that what you're asking? I'm not sure what you're asking. A profit target? Yeah, where I put it on. All right, so here's what where I put it on. The rules for the trade plan say put it on right around 2 delta, you know, and I think you can go maybe $5, $7, $8, something like that. But I think if you're buying the hedge, it doesn't really matter, in my opinion. It doesn't matter where you put these on. So I'm 2 delta, 1 delta. I might move this up a fraction anyway because it doesn't really hurt me to do that. Here. Yeah, if I did the single, I'll probably get filled. I'm trying to do it in 1 entry. I was just trying to make my life easier. But we can see if even if you move it up, it's still not costing you a ton. If it costs me $1.50, I don't really care. Oh, well, I guess I'm going to get filled on that one. So let's get this thing canceled. All right, so I did get filled on this one. I moved it up a fraction here, and I have a new one of these hedges. So this is and early on here, I'm trying to get a couple of these on. So it's a January 31. It's the regen fly hedge. Bam. So there's a new one. And again, I paid to put it on. I only paid 50 cents. And so to me, it doesn't matter. I'm out 100, $100 or so, $150, whatever. So not a big deal. 125 bucks, I think it cost me to get into this. So I'll pay a fraction. I'll pay 125 bucks to have 2 of these on. Now this particular one, again, a little bit more positive Vega than this one that's been on for a while, but that's because this is this center strike's not behaving fantastically. But overall, I don't mind these. I don't mind those 2. I did throw on a new 14 DTE hedge yesterday, so there's a delta hedge for me. It will help me with, a good delta hedge is a good volatility hedge too. You don't have to hedge like VIX itself. You can just have a lot of volume inputs. And what I did yesterday was when I put this 14 DTE on, I went down just a little bit more and grabbed 5 contracts instead of last time I did 4. Why? Because it gives me a little bit more volatility protection to have more contracts. So I went up a few more, still within my trade plan, which is 4+ contracts, somewhere around $3. And I paid just under 3. I paid $2.80 for that one. when I put it on, and I went to 5 contracts instead. Okay, which was perfectly fine. So it gives me a nice little hedge in there. And then I don't think we need to go through much more. I don't want to waste anybody's time today. Still have a 16 DTE put debit spread. I still have an old 112. That's now a 111, 70% on the naked puts. Nothing to do there. Still left me at 60 DTE weekly hedge that I had on a month ago. I'm just leaving that alone. It's totally fine. I have a call credit spread on here. So I did put a call credit spread on posted that trade. So a little bit of a call credit spread when I thought we were overdone and selling off. So I'm just looking, this is just a small trade. We're up 10% on this particular trade here. So you got a call credit spread trade. So that was trade 213 yesterday, but I did put a call spread on. Let's see, 111. Okay, put debit spread. The old 3-5 hedge. This thing's not doing much of anything at all here. Again, I'm not sure I love this hedge, but we'll see how it plays out. 111, put debit spread, 111, naked put. This thing's just been floundering around for 2 months, doing nothing. But I just gotta let it keep playing. Okay, it's fine. Down $700, not a big deal. Long-term 111, still an old XL 111. I'm not doing anything with this thing, just leaving it until it dies. It's not a heavy position. And I have, when we get pops up, I do close slices of this thing. All right, so there you go. That's all the ES positions. Gold, we got a 111 on. This thing is totally profitable here. I could probably take this whole trade off. I don't think we're going down to 2250, but we could. I can just close this piece here. Yeah, good. So we'll take the profit over 90% on the naked put, and we're just going to sit here on a put debit spread for this. So we got the put debit spread that's remaining. We'll let that thing keep going. Copper, we got a really a put credit spread. Not sure why I called it vertical. I think that because I was just being quick. You could have done a rename. Yes, I know. So put credit spread, this thing's fine. It's down a couple $100. RTY, put credit spread here, down a little bit. This one's down a little bit as well. ZN, all positive. Put credit spread, naked put. And then we've got our bill. We've got our MicroStrategy, which is a put credit spread as well. And then we've got our TLT, which we did write calls against. And then we're up nicely on the underlying. All right, so there's where we are. Hope this was helpful, give you a sense of what we're looking at, but you got a little 0 DTE, so we closed the 0 DTE today. We got into a new 150-day hedge, and then we got out of one of our gold positions. So overall, I'm really not changing my fundamental plan here. We're going to keep trading. I have a couple more defined risk trades on than I've had before, which keeps my buying power in check a bit more, but it also allows me to just do more trades overall. And what I'm trying to do is trade around the core 111s that I have on, and I can get some more strangles on. I have buying power to use, so we'll look to enter some trades today. All right, hopefully this was helpful for you. I'm going to let you guys go. So we did a little bit of everything. We added a hedge. We won some 0 DTE. We looked at a bunch of charts. I think you've got plenty of setups out there. I would just keep trading. Okay? Size yourself correctly. Keep trading. Don't be afraid to use some defined risk trades if you want to. instead of just lobbing naked puts out there, do a put credit spread. I did a call credit spread as well. Based upon what I'm seeing, I'm just still trading, putting trades on. We're going to set trades up. We're going to take trades off. We closed another winner today, and our buying power is in great shape. So we're going to keep cranking forward. All right, have a great day, everybody. We will see you back in the Discord. See ya.